What's up everyone, it's Kadi with Money Investing, and in this video we are going to be talking about Enphase Energy. They are going to be reporting their first quarter fiscal year 23 earnings on Tuesday, so tomorrow after the markets close. That's going to be April 25th. I'll go over the earnings expectation. We'll talk a little bit about the revenue growth, the cash flows, the valuation, the balance sheet, the intrinsic value. We're going to calculate that, and of course the technical analysis on the stock as well. If you guys enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. Everything is going to be included, as well as all the private videos and member benefits as well. We've got a little bit over 3,700 members in our community from all over the world, so link's going to be down below. So this right here is going to be Enphase's stock chart, and we have done several analysis on Enphase in the past. I've done several videos on this company. It is in the solar renewable energy, it creates micro inverters. It's been very profitable and very, very strong in terms of returns. If you take a look at the 5-year growth here for Enphase, it has gone literally from just a few bucks a share from 2018, even as low as 2017 when it was trading at roughly around 65 cents, to now trading at well over $240 per share. Right now trading at 221, slightly down about 1% pre-market. So this right here is going to be that revenue growth. This is the income statement. So you can see that net revenues have gone from $774 million to over $2.3 billion for the company, as gross profit has also expanded more than 3 times from $345 million to over $974 million as of 2022. When it comes to operating income, it's also increased from $186 million to $448 million. And we've got net income, which is the bottom line profit, also gone up from $134 million to almost $400 million for the company, with diluted earnings per share sitting at $277 for the company, growing from 95 cents per share. And the share count is relatively flat at 141 to 144 million shares outstanding. This right here is going to be their balance sheet. So they are sitting on about $1.5 billion of cash and marketable securities. So this right here is going to be the cash, $1.1 billion of marketable securities. So combined is sitting at 1.6 billion, and total current assets at 2.2 billion. Total assets are sitting at just over 3 billion. And if you come down to their long-term liabilities, so debt non-current over here is going to be sitting at $1.2 billion. So again, more cash than debt on the balance sheet. So the company's got a negative net debt, and the company also has more total assets compared to total liabilities, and more total current assets compared to total current liabilities, sitting at $638 million. So a very strong current ratio, a very strong quick ratio, very strong total assets over total liability ratio, and not to mention more cash than debt on the balance sheet for the company. Now, moving forward, this right here is going to be the expectations. Before we get there, just a quick reminder on the margins. Margins have been pretty strong for the company as well, at over 41% gross profit margins as of fiscal year 22, and net income sitting at just under 400 million. So if you do the math, 397 divided by 2330, we're looking at 17% net income margin for the business as well. So for every $1 in revenue the company generates, 17 cents trickles down to the bottom line as profit, as net income. This is going to be their first quarter 23 financial outlook. So this is literally what they are going to announce tomorrow. This is what their guidance was. Revenue between $700 and $740 million, which includes shipments of 100 to 120 megawatt hours of Enphase IQ batteries. GAAP gross margins between 40 and 43%. Non-GAAP gross margins to be within range, 41 to 44%, and GAAP operating expenses to be around $181 million, with non-GAAP operating expenses around $100 to $104 million, with GAAP and non-GAAP annualized effective tax rate between 20 and 24%. So they are still, of course, expecting to report profitability, and this right here is going to be their earnings expectations, which EPS normalized estimate $1.22, EPS GAAP estimate at 69 cents per share, with over $720 million in revenue expected from Enphase after tomorrow's market close. Now, valuation is the only question for Enphase. It is a little bit high. It is, in fact, actually very high, because it is trading at over 40 times earnings multiple, with the price of sales trading at over 12.9, almost 13 times on a trailing basis, and over 9.6, almost 10 times on a forward basis. Enterprise value EBITDA trading at over 30 to 60, and price to cash flow at over 37 to 41. So not to mention that we've got a company on our hands which is consistently growing revenues, consistently growing earnings, profitability, excellent margins, great balance sheet, but the valuation is unfortunately a big problem here. This is going to be the profitability metrics. Again, very strong return on capital, return on assets, and return on equity as well, and very nice profitability margins for EBITDA, free cash flow, net income, and gross profits as well. Now moving over to the actual forecasting for the company. This right here is what analysts are expecting Enphase to actually grow earnings by. So they are expecting in 2023 for EPS to be $5.55, which if you compare to 2022 number, 275, that is going to be a growth of, I believe, over 100%. So 275, that's going to be a growth of over 100% for Enphase in 2023. So they're expecting $5.55 and then all the way up to $12.62 by the year 2028 and by over $17.33 by 2032. And that's going to be a growth of about 17.8% or 18% over the next 5 years and over 13.5% over the next 9 years. So what I'm going to do is I'm going to use a very conservative 18% growth for the company. So we're going to plug in 18% over here. We're going to come back to the P multiple. Discount rate is going to stay the same, 12%, 10% margin of safety, and no share buyback because the company has not really been buying back any shares. It's pretty much been stagnant, right? It's been flat. Now, price to earnings multiple, right? 18% growth rate. Ideally, for me to be very conservative, I'd go with 18 or maybe 20 times earnings multiple to keep that PEG ratio intact at 1. But just because it's Enphase, the growth rate is expected to be pretty good. I'm going to go with, let's say, 24 to 26 times earnings multiple. Let's just start with 24. And the fair value obviously ends up at $77 per share, not to mention the stock price is at $224 at the moment, which obviously does represent Enphase trading at a very significantly high valuation. Now, if I go with, let's say, 45, which is almost, where it's trading right now, even then we end up at $144 fair value, which would still represent about a 35% potential downside for Enphase to come down to before it becomes appropriately priced in the markets, even after a 45 times PE multiple. So if you go over to the sensitivity grid, you will get a good understanding on where the price to earnings and where the growth rate really is pegged at. Because if we go with, let's just say 22%, and let's just do 30 times over here, and then come over to sensitivity grid, we're still far short. We're still way behind. So let's just do 30 and 30. Or let's just do 30 and 40 here. And if you come over to sensitivity grid now, you can see the market at the moment pricing in Enphase at 224. If you come down to, let's see, 225 over here. So that's the number that we're looking for. $225 right over here, the one that I just highlighted in red, is pretty much the market expecting Enphase to grow earnings by 32% and trading at a 40 times PE multiple over the next 5 years, which again, if you consider NVIDIA, if you consider some of these names, they are priced for perfection. This is what price for perfection means when you are trading at a valuation which is incredibly high, and the expected forecast is also significantly higher. So if you are, somewhat conservative, if you do believe that, even analysts believe that the growth rate is going to be 17, 18%, and yet the stock price is trading like it's going to grow 30% over the next 5 years, trading at a 40 times PE multiple. So, and there's nothing wrong with that. It's just that we have to understand where the valuation really is for a company. Because of the fact that it's done so well, it has rallied quite a bit. It has pulled back because we did have a short trade idea on this as well. It's dropped over 44-45% after having that sort of that ascending wedge that we were talking about. So this right here was that ascending wedge. And then, of course, it broke down, dropped over 44-45%. And now it's starting to once again trade at that resistance at $224-$225. So this right here is going to be that range within which Enphase is right now trading at. Resistance is going to stay up at 236. So this right here is going to be that level to focus on. Right now, we are getting rejected here from back in April, back in February, and of course, right now, back in April as well. And the next target is going to be 260 all the way up to 335. That's going to be pretty much the all-time high. But right now, I do expect a little bit of consolidation sideways, considering how RSI and MACD are also approaching some overbought territory as well. Support level is going to be all the way down to 177. But as we can already see from the numbers, there is going to be some potential downside considering the growth rates and the P multiples. Even if you do 20% and let's just do 30 times P multiple, something that I could maybe see myself getting on board with, even then we get a fair value of close to $104, $105 per share for Enphase moving forward. So I remember putting up a fair value closer to 114, 115 in my previous videos. So this right here is really the level that I'm paying attention to for Enphase for of course a very long time, considering how much it's already moved up and the valuation screams overvalued. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. Again, Enphase reporting earnings tomorrow. $1.20 is going to be that EPS with a revenue estimate of $721 million, and resistance right now at $229, $230, and support level is going to stay put down to $177, $178, and those right there are going to be some of the range within which it's trading at the moment. So as always, happy investing. I'll see you all in the next video.